On my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero, and we're here again for another episode of Bag Talk. This one's going to be a big one. I'm giving my breakdown, my opinion, my personal experience in the 12 months. Now, this might be coming in August. This might be coming at the very end of July. But the important thing is 12 months in MSTY. I've got some opinions. I've got some hot takes, and everybody might not like all of it. There's going to be some controversial stuff that gets talked about in this episode, in this breakdown. Now, as we're moving through, before we get into anything, I want to make sure you hit that like button. If you've been here more than twice, I want you to hit that subscribe button. I'm sure that there's going to be some hate on this episode, and I want to hear from you down in the comments because I do reply to all of my comments, so you'll get a response. Might be a few days, but you'll get a response. And I love talking about money. I don't think that I'm the smartest person in the room. This is not financial advice. This is some dude on the internet that's tracking his journey to financial freedom, achieving what some would call FIRE. I don't know that I'll necessarily retire early because they say it's not FIRE if you don't retire. They get real mad about that. And personally, I don't like sitting around. I sat around all day today before I started recording this, and I got sore. I'm like, oh, I'm going to go record a video and then work out. Like, I'm not built for not doing anything. So I won't be retiring, but I won't have to be going to work. And I probably will take more time off to do other things that I want to do, or potentially work in a career that pays less because it's something that I actually want to do. Who knows? But the important thing is that we have the option, which is the goal that I want for the people in the Wolfpack. I don't expect everybody in the Wolfpack to emulate or replicate me. We're not building a cult of personality over here. I want you to have the ability to do whatever it is that you want to do. And hopefully you guys watching me track my journey to getting to that point, because at a certain point, they'll be like, why are you going to work? Why are you still going to go get a check? Like, is it? The issue is, you can't talk trash about me the way you talk trash about the rest of these influencers, because I am actually very forthcoming with exactly where my money's coming from, and it's not YouTube. I'm not selling anyone anything, which gives me a little bit of a different perspective because I'm not tied to this. I enjoy doing this. I am doing this for the people who are going to come up later that aren't listening now, that have access to me, because I won't have time then. I've said that multiple times. But I'll be going, if I'm going to work or if I decide to continue to go to work, it'll be because I want to, and it'll be very strategic, because you're definitely not, one of the things that you're definitely not doing if you don't have to is going to a job where people talk crazy to you, or it's a situation that either challenges your morals, challenges your values, or challenges your sanity, to be honest. So we're building something over here. What we're building out is with the intent of not having to do that. Now, for the Wolfpackians, for my Wolfpack, definitely share these videos. We got to get it out into the algorithm. I appreciate you guys sharing, and I love those of you who correspond with me down in the comments. And I really do enjoy those of you who tap in with me throughout the day to talk about money. I love talking about money. It's important. I believe that if you fix the money, you'll fix everything else, because most, if not all, of our societal, familial, household, most of these problems come back to the money. So with that said, let's go ahead and jump into this. I'm going to go ahead and pull up to the stage, because the first thing we're going to do is we're going to go through some fact checking with MSTY, because a lot of people think, and I mean, the first video that I did when I added this into the portfolio and decided to go down this high yield rabbit hole where these products are garbage. And I'm not going to lie, some of them are. Some of them are garbage. And I'm not even going to, actually, you know what? None of them are garbage. People don't know how to use them. When I've used these products inaccurately, guess what? Lost money. When I bought into things chasing yield. Guess what? I lost money. When I buy things that I understand the flow of it, when I buy things that I'm actually holding the underlying, guess what? We make money. It works out. So we're going to go through MSTY because this is basically all that's in the income portfolio. Actually, it is all that's in the income portfolio right now because I haven't even made my next purchases yet. I got a little gun shy and did not pull the trigger on starting the next position. But by the time you see this video, we'll probably have a portfolio update with the next position that I'm working in my primary income portfolio, which, give a quick caveat there. My primary income portfolio, the goal of that is to cover all of my my cut to the quick expenses. That is the goal of that portfolio. I'm actually going to use the Robinhood portfolio to cover lifestyle, the fun stuff. Like the fun's gonna come from the Robinhood. Everything else is gonna get covered from my income primary portfolio, the one that's over in Charles Schwab that we always reference. We reference that once a month. Robinhood one we check weekly. But yeah, so as we're going through here and getting into the conversation about MSTY, there's a couple of things we want to look at. The distribution rate is currently at 70.57%, which is, for me, perfectly fine. I'm here for it. And the reason I'm here for it is because I've seen it way higher. I was not there for some of the low payouts. I did yield chase into this position with the caveat of I understood the underlying because I came into TradFi from the cryptocurrency space. This is the reason that I came here, were the high yield dividend products. So when people were like, they're garbage, I'm just like, well, you're just not used to making money. In crypto land and decentralized finance, we make money via this means called yield farming. We don't just trade to get money. We'll yield farm, which is high risk, high reward. A lot of management goes into it. You got to like manually reallocate funds because you'll be out of price range to get paid, and then you got to get back in. It's technical. You're dealing with smart contracts. Sometimes you stake stuff. They change the staking protocol. You didn't check it enough. It updates, and then you lose your tokens. There's a lot of risk involved with that. So when I saw something like this where I'm like, cool, I can get, 100, around 100, over 50, that's awesome for me. And I don't have to do anything but hold it. Even better. I don't have to worry about waking up, logging in to Charles Schwab and being like, hey, you can't access any of your funds in MSTY. Amazing. Sign me up. So what we've done is as I started going down the rabbit hole, I ran into a scenario where I had a catastrophic failure of my leg. I had to get surgery for a severed Achilles, and I thought I was going to lose my job. So if I was going to have to find another job while recovering from a surgery, I was like, I at least got to be able to cover my house note. I was like, everything else can go to hell. My car's paid off. I can always scrounge up enough money to do the taxes. But until I can get back to driving, because for me, I could always, my go-to, I can go do Amazon Flex. I could go do Uber, something of that nature with my car because my car still runs. So that was the plan. So I took out a loan for about $8,000 and threw it immediately into my Charles Schwab portfolio. And that was the foundation of my portfolio that we see and love now. I'm a big leverage person. I don't like using margin because you can get called on it. Also, it just muddies up my portfolio. I like to look in there most of the time and be able to navigate and know what money I can move around and how much there is. Also, there's the risk of being called. So I use other means generally, unless it's just fronting myself until we get paid to get some money transfers started early. With the MSTY position, I did that. I also tried to diversify because yieldmax had a bunch of offerings at the time, and I bounced around through a few of them. And it would always end up when it went. And the issue with these things with me is If you don't understand the underlying, it's hard to go through the tough times. It makes it unbearable for me. Like if I don't know why something's down, like I'd rather just lose the money than not know why it's going down and have, like I see it all the time on Reddit. Shout out to my Reddit family that I go back and forth with. Apparently talking to anybody on Reddit, everybody wants their gotcha moment. And that's cute. It's cool. But there's a lot of people that are in these funds that just don't understand the space, or they understand traditional finance and don't understand that like crypto kind of flips that on its head. So it doesn't always work. It works sometimes. Not going to lie. It does work sometimes. But when it doesn't work bad. And then people ask stupid questions like, why is this going down? What's going on? Oh, what do you think that the dividend's going to be? Whatever. And I ended up consolidating multiple times down into MSTY. Like I try to be smart, try to be savvy, try to make it complicated. And, in doing that, I did a lot of trial and error over this past 12 months. And one of the things that I've realized is, I love Reddit because you do get information there. You're just sifting through a bunch of dumb questions, but there's a lot of good conversations, even on the dumb questions sometimes going on in the dumb question. There'll be some gems and nuggets in there. So like I do troll those boards. I'm in there. I'm commenting. I'm going to actually start sharing these videos there. So this one will probably definitely be in there. Like if it's relevant to whatever subreddit I'm in, I'm just going to start throwing the videos in there because everybody else does. So whatever. But it's been a game changer for me to just simplify my strategy. And like now that I've got I think I'm on to something that I'm going to be doing going to be case testing it for the next 12 months. Because I think it'll give me all of what I need for what I believe is a fully encompassed income portfolio. One of the things that I am also looking at was I originally was just trying to get to 1,000 MSTY, and then I decided that I wanted my minimum to be 2,000. And we'll talk about that in a second. Let's go ahead and jump through these basics. So distribution rate 70.57%, which falls into your junk bond territory. This isn't real. These are terrible products. That's why they think it's garbage, because it's paying 70%. Your money's just gonna erode to zero. So the 30-day SEC yield is 1.76%, which is pretty awesome. Let's look at the performance. Oh, look at that NAV. 1 month, we're up 10%. 3 months, we're up 38%. 6 months, we're up 34%. Year to date, we're up 34%. And 1 year, we're up 134. Oh, well, let's just go here. Since inception, cumulative, we're up 336.59%. Now, one of the things I want to talk about here is we always talk about NAV erosion. Everybody says NAV erosion. The definition of NAV erosion is the NAV has eroded below the launch price, not from when you bought it. That's just you buying in high and the price going down. The NAV isn't eroding at that point. It would indicate that every time they did a payout, the amount of the position consistently goes lower, which means that we would be under the launch price right now, which we are not. So first and foremost, in the last 12 years, have we experienced NAV erosion? No. For those of us who dollar cost averaged, like myself, even through the top, did the price go down? Yes, because we're dollar cost averaging. Why don't we care about that? Because I bought this for the income. Like, I don't understand why you would go buy something that goes, hey, I'm going to pay you every month. And then go, why aren't I making a return like what MicroStrategy is? Well, MicroStrategy doesn't pay us every month. Think, people. Like, the level of mouth breathing that people do when it comes to financial matters is mind boggling. Like, it's insane the way people think. Oh, what's this thing do? It pays money. Why doesn't it go up? the type of dumb question. That's just a dumb, like, do you think, like, this is why you're poor? That's the first thing that comes to my mind. I'm like, you're a brokey. Like, this is why you're broke. Like, you obviously don't have money if this is the way that you think about things. So the NAV hasn't eroded. Sorry if you guys bought high and the price went down and you don't understand that you bought it for income. So, like, you should be getting the income. But that's your problem, not the product's problem. Stop complaining and stop talking about it. Like, until we get below the inception price, the NAV isn't eroding. As a matter of fact, it's going up. Like, we're above. We're bouncing around jaggedly above, but it's above. Also, one last clue, if MicroStrategy goes down, we go down as well. Just so you know. Okay, moving on. Let's go. Distribution details. Now, last month, this month of July, month that I'm recording in, we had the lowest payout ever. The worst one. And it was like the worst back to back. It was like, first we had 147 in June. July rolled around, said, hold my beer. And we had a 123. It's the reason I wanted 2,000, because I make my base case that this is probably going to be around $1 at worst, and I want the minimum to be around $2,000. So we pushed and persevered, and we got down here. And, like, if you go to the YieldMax site, you can do your own research. That's another thing that's very valuable. Like, don't just believe people when they say something's garbage. Go check, because the first payout was $4.12. You roll through. They had some. Oh, I guess they had a 185 when I first got into it also. And then followed it up by 419, 442, threes, $2. Oh, we had a 135. Oh, that was April, though. That was this year. So we've had some low payouts. We will also have some high payouts. We also got to take into account the IV on MSTR affects what we get paid. The higher the IV, the more income we can generate. So those are the things that I wanted to get out of the way first. So why did I choose MSTY? I come from the cryptocurrency space, as I said. I'm going to jump back up here for a little bit. Make it about me again. What about me, Mr. DeVille? Okay. So why did I choose MSTY? First reason is I come from the cryptocurrency space, Bitcoin. I have some altcoins. We track some of those portfolios. We're condensing down. It's probably going to just be Bitcoin and Ethereum. Mostly Bitcoin, because we're trying to get a whole nother Bitcoin. So at a certain point, it might be my long-term holdings will be comprised of just Bitcoin, and I'm fine with that. That said, I chose MSTY because of MicroStrategy. Plain and simple. And I was like, oh, you can generate income. And I'm like, oh, that makes sense to me. Income off of Bitcoin. That's yield farming for Bitcoin, except for less risk because I don't have to put any Bitcoin in there to do it, which is awesome. So got into the position, been riding it out. Dollar cost average went through the highest of highs and, down to the lowest of lows. We bought a couple of shares around $17. So I'm fine about it. Hold up a second. I want to get my next screen queued up. And so the next thing that people ask, well, did you make anything? Well, yes, we did. And, last year we pulled about, I think it was like right around $15,000 from last year. Rolling into this year. Well, no. It was 13. And rolling into this year with my goal, my low bar goal was I want to double this every year. And so far we're projected out this year with what we've made to be at about $30,000 in the $30,000 range. Now this changes every time I update it. So every time I upload my transactions for the month, this changes because it'll factor in that month's payments, and it'll update its averages. It's not perfect, but it's putting me in the ballpark, and that's what I use. So we're looking at about $30,000 for this month. So let's go to our positions. Now we've moved. Oh, no, all that stuff's gone. So everything besides Strife, which is our cash reserve, is gone from this portfolio. But and this also isn't reflecting because I haven't updated the month of July's transactions. So there's transactions that are missing from this. But where we are with it below 2000, our total profit on the position, we are at 25.79%. We are no longer buying into this position. We will be moving forward, working on our next position. So this will actually start climbing because I can actually just get paid. 25%, and then the over on the total, we are looking at 43.4% total for the portfolio. Now we've obviously condensed down. We've sold. We've done some good sells. We've done a lot of tax loss harvesting. Is it very volatile now? Absolutely, because it's just Misty in there. So we're swinging every day, but I'm okay with that because did I not? Yeah, I put that on the screen. But I'm okay with that because specifically, it's still paying. And secondly, we're going into a bull run, so I know it's getting ready to pay order of magnitudes better. Do I think that it is the best MicroStrategy play for high yield income? So now we're going to go over and get into the cons. The cons. I only have two. Well, I honestly only have one. And the con is yieldmax is very, very, very experienced in options trading. And I love the products that they have. I love what they do. But they're not a crypto native company. And I understand people aren't going to be able to wrap their heads around this, but when you're looking at the spreadsheet and you're just doing this like, oh yeah, this is binary. All stocks work the same. Crypto stocks don't work the same. You guys don't even value them correctly yet. So to say that all stocks work the same, like that in and of itself, like this is actually in fact different. One of the ways that I know that is look at the way that they handled Platy and now the way that they're handling Hooy. Both of those are very high NAV positions. They're expensive, but they're staying expensive because those are just regular stocks. They're not crypto related. A lot of they've had issues with the underlying, but like if you find something that's like you're a stockholder of, because I was in Palantir for a little bit, I sold those positions to start working on my Bitcoin treasuries because it's more aligned with what I believe in. But I'm a Robinhood holder, and like that stock does not it has swings, it goes up, but it's chopping its way up. Like it's on a good tear right now, and they're able to capitalize on that. MicroStrategy does not function like that. Like the swings are way more violent. They're a lot more unpredictable. Like you're not just looking at stuff that's going on with the stock. You're looking at what's going on with Bitcoin because it's a reflection of Bitcoin. They don't look at TradFi guys don't look at Bitcoin. They're not in the industry. Most of them don't believe in it. They have a direct competitor, imst, which, for clarification, yieldmax, what they said, these funds are for high income. They're paying you the maximum amount of income. They're not focused on growth at all. Great example is Ulti. Now that they've done the remodel, that's working the way that they probably intend all their funds to work. It's very NAV stable. It's not spiking up, not going down, but you know what it is doing? Paying super well every week. It's awesome. So Bitwise, which is a crypto native company, released imst, which is a covered call strategy on MicroStrategy. And their ethos is they're actually looking to grow the NAV. They're like, yo, we want NAV growth. We're focused on NAV growth more so than income. You'll still get income, but our focus is NAV growth. And they've been paying better than MSTY, which is focused on income. And the only way that I can think that this would work is they're running two different strategies, but also imst is actively managed by people who come from the crypto industry. They look at crypto, they're looking at Bitcoin. They're able to connect those dots. They're looking deeper. They're more in tune with what's going on. They're not just looking at data on a sheet that's just the stock market. They're looking at the whole picture. And I think if you look at the whole picture, there's a good chance you might get the same results. Now, we're going to have to wait till 12 months down the road to figure out if they're able to consistently do it. But I remember some of the people that are emotionally tied to MSTY. Bear in mind, I'm not selling my 2,000 shares. But these dudes are emotionally tied, like, oh, imst they missed this option and they missed this option. And then somehow they have a higher distribution rate than the company that is supposed to have the highest distribution rate. These are just facts. Now, are they getting lucky? Maybe so. Like I said before, I can't even make an honest guesstimate until we're 12 months down the road. But what I will say is it is being utilized in other portfolios. That's all I'm saying, because I'm like, over the bull run, I'm like, I think that they're in my opinion, the bull run, they're going to either show that market expertise matters at this, or they're going to crash and burn. Either way, I'm supporting them because I want my money over there. I'm also supporting YieldMax because I'm keeping my 2,000 shares. And until I get to a range where I'm about $2,000 a month for my other position, my second position is going to be a YieldMax position too, because it's worked out and they do well at other things. So like, I'm just not big on diversification anymore. So I'm like very focused. So now that I've got the first position out of the way, I can focus on the second position. And so like, as this portfolio grows, the next probably $30,000-$40,000 that comes in here is going to be that next position, which is going to be laser focused on it. Next position. But my overall rating for MSTY, it's a win for me. NAV relatively stable. I mean, it's NAV positive. Like, it's not even NAV stable. It's NAV positive. It's just you got to have the ups and the downs. Like, and when we went below the launch price, what happened? MicroStrategy tanked. We weren't even NAV eroding then because we recovered with MicroStrategy. We just follow that stock. And I'm sure that they'll probably start tweaking the strategy for MSTY, which would be good. I mean, if we get anything close, well, I mean, Ulti has so many options to make money. Like, that one for me right now, even though I do not, this is the first one that I have dumped out of and come back to. I do not like high yield ETFs that reverse split. I don't. This is the only one. It's anomalous. None of the other ones are doing this well. That have reverse split. Like, they're go away. Like, it's just a kiss of death as far as I'm concerned. So YieldMax got something going on, because the way that Ulti's working now, amazing. MSTY, solid. I'm excited now that we're able to turn the hounds on getting the debt paid off, so that way we can start investing at a higher clip, getting ready to get my car traded in for something with less miles. And yeah, we're gonna be paying for that out of one of the accounts. I haven't decided yet. Like, I don't have any money outflows from my Robinhood account, so I might just do it over there just to see what we can do. My last con and my last warning / something to put in your brain about high yield in general, about the stock market in general, is these things produce dollars. They produce dollars. And I will say this till the day is long, till I'm blue in the face. Dollars are worthless. They are. And you might not like it. You might not want to hear it. And it goes against the ethos, because especially in the Reddit forums, I know they're going to come for me for this one, but they just want to stack dollars. They're like, I just need a bunch of dollars. And I'm like, I get you, but like, after you solve your income problem, what then? And then they're just like, well, I'll just keep stacking. I'll just keep stacking. I'll just keep getting more dollars and more dollars and more dollars. And I'm like, yo, like, that's like somebody who's in a ship drowning underwater going, yeah, just give me more water in here. The reason I say that is because we're dollars are deflation or inflationary. They inflate every year. Everything gets more expensive every year. And I understand that the logic that they've given us on this boomer plan, your 60-40, your go to work, get a college degree, and go work hard and you can buy a house. Well, like, no, you can't actually. It's crazy, because you're graduating with hundreds of thousands of dollars in debt to go make very little money, to go compete with AI so that you can't even work because AI is taking your job. I remember when I was growing up, they told me dummies like me were going to be the ones who are out of work, and I can't. It's so easy for me to find work. Like, they don't even want to fire me, and I got a bad attitude. Like, because I can have a job by the end of the parking lot because I'm good at what I do. And I work at a job that they haven't made a robot for yet. And I'm pretty sure I've got probably at least another 4 years before they have a robot for me. At least. Probably longer, because they're just, I mean, I don't know that they're going to be replacing manual labor. There's just a lot of moving parts with that. And I'm in a very skilled manual labor position. So I don't know that they're coming for me for a while, should I choose to continue working. But also, everything's getting more expensive. And no matter how rich you are, nobody says, geez, I've got so many dollars that stuff's cheaper this year. I never hear, I deal with a bunch of very wealthy people, and I never hear them say, hey, stuff's not expensive. Because prices go up constantly. We all know what stuff costs. And if you're financially astute, financially literate, you pay attention to that stuff. You know that, like, hey, last year I bought this doohickey, this widget for $4. Now it's $9.50. What's going on? I got to have more dollars. And we're not getting raises. You're not getting raises. Your cost of living raises doesn't even keep up with inflation. And that's basically what you get if you're lucky. Because they don't want to pay us. Because the people at the top that have these jobs right now, they're not out looking out for their employees anymore. They're out here looking out for themselves because they know this ship is sinking, and they're going, hey, like, if I can step on your shoulders and push you deeper into the water, I'm just going to do that and take care of me and mine. If you're not in their house, they don't care about you. There's no work families. There's a place for you guys to cheat on each other. It's ridiculous. They're not families. Everybody's taking care of themselves, and the further down that totem pole you are, the more you're being pushed underwater. So people think that their out is to go, I'm going to make the same income those people are making. And I'm like, you're looking at people who are making what you perceive as good income do inhumane things to the people who work for them, like not give them raises, no bonuses, complaining about what little bonuses they give out anytime anything goes wrong, because they know that the system, the card house is coming down. And they have money. So the dollars are actually the problem. Now, I'm a firm believer you got to use what you got to live in the reality that you're in. So I need these dollars because I don't want to have to go to work. If I'm going to be in an inflationary environment, I don't want to have to do anything. Because if we're playing pretend, I want to play pretend the best. High yield dividends is a good tool for solving that issue. If you hate your job, if you're not doing something you actually want to do, if you're in a position where you're doing something you want to do, but you're going to drown doing it, you drown financially, like it's over. You get to live outside. They're not going to care. Your work family isn't going to come get you out from under that bridge. Those people don't give a heck about you. They give no Fs, not a single one. Because when you're out there by yourself. You will starve alone or with the other people who have failed at this game. And y'all can starve together and like comfort each other while you're on drugs or whatever they do. Because I've never seen a normal person just sitting out there under the bridge. I'm just saying. Ever. And I wouldn't want to not be on drugs if I was stuck living outside. I'd have to be on drugs too, because like that would be the only thing that would make it palatable, because I know what air conditioning feels like and it's great. So the thing that I will impart with you in closing out this conversation is understand the medium is the problem. When you look at MicroStrategy, oh, the numbers are going up. Yes, in dollars. What are dollars going down against? Bitcoin. Therefore, MicroStrategy is down against Bitcoin. And if you want to have a fun little experiment, take your favorite altcoin, because I know the altcoin people are going to be like, well, these are going to be outperforming. And I used to believe that too. But we know for a fact that dollars are going down against Bitcoin. Take your favorite, whatever investment you have that's not Bitcoin, and value it in Bitcoin and see how it's performed. And take any time window you want from when Bitcoin first began. At no point, all it's doing is going down. MicroStrategy right now in Bitcoin value is down 90%. The S&P 500 is down 100%. Everything's down against Bitcoin. The dollars are an illusion. So you have to know what you need to get done. So I want to pay back my debt in those non-existent cheap dollars. I want to buy everything that I can in those non-existent cheap dollars. But for those of you who are in this high yield dividend space, because a lot of you have a lot more money than me. Apparently everybody's rich on Reddit. So like you Reddit guys, this ain't even a conversation for you. I don't understand why you're even buying these funds. Like it also makes no sense. I would just go buy a bunch of Bitcoin. But you should probably be taking, because me personally, I factor in continuing to invest in my budget for these funds. I'm not going, oh, I just need to get just enough to quit working, and then I'm going to quit working. You're going to have to go back to work because of inflation. It's not 3%, just so you know. So if you're making just enough and you can't reinvest, you go broke, even if it's NAV stable, because you need more dollars. You're going to need more dollars next year, like at least 10% more. So if I restrict myself and I go, I can get out, and if I can just get $60,000, I can just not go to this job. Next year I need $66,000. So if I quit at $60,000 and I don't have any type of growth plan built in, now I get to go back to work in probably about 10 years or so, because I'm not going to be able to afford anything. Especially if you're using it to maintain bills that you have now. Like I've got a mortgage now. And I plan to consistently have a mortgage because I'm going to be tapping that credit line. I'm going to be doing that. But I don't have the ability to leave for real. I have the ability to make an emotional decision and leave temporarily, but that's not permanent. You going back because of inflation. Just like all the boomers who are eating their portfolios. Market goes down. All the prices of everything go up. Guess what they're doing? Greeting a Walmart. Sounds great to be off for 5-10 years and then have to go work a job at Walmart because you were eating your portfolio and you couldn't reinvest no more. Also, you didn't want to manage it. Factor in, at minimum, a Bitcoin allocation. Thank me later. Because the medium is the issue. And I got one more for you. This is bonus. These aren't set and forget. If you're bad at managing money, if you're spending every dime that comes in, you're going to have to fix that first before this will work for you. Stacking it just to stack it, just to say you have a lot of dollars coming in. I'll give you about 2 more years. That's not going to be impressive. Oh, look at how much I'm making. I mean, I think it's impressive. Passive income does impress me. I'm not going to lie about that. Because you're escaping the matrix. I respect it. But having a bunch of dollars when everything costs a bunch of dollars, could you imagine being in Argentina when the Argentinian peso crashed and the millionaires there just could now go buy bread? Sitting on a bunch of dollars is not a good look, bro. Like, I'm just saying. So there's more to this than what it's made out to be. Is it difficult? If you're good at managing money, absolutely not. If you're good at being hands-on with your cash flow, absolutely not. If you're taking those dollars and not only reinvesting them to generate more dividends, because with these, I do recommend feeding the machine. But I also think that you should have a long-term holdings portfolio, obviously going to be denominated in dollars, but it's better to sell those off or actually sell those off versus having to sell Bitcoin. And the awesome part is you can leverage all of this, which is an added buffer. But you have to be strategic. Like, when people are just holding one thing, I'm like, y'all are wild. Like, the only one thing I would ever hold is Bitcoin. That's me. That's why I wear the hat. I'm about that life. That's where most of my net worth is. Obviously, I'm trying to do a little bit of something over here so that I don't have to touch that. And we're fixing an income problem. So we're over here strategically. We're not here because I think it's better than Bitcoin. I don't think it's better than MicroStrategy. Like, if you're looking for growth, that's what those things do. If you're looking for deflation, which, for those of you who don't understand, deflation means everything gets cheaper every year. That's what Bitcoin does specifically. Yeah. So I wouldn't have place all your eggs in the dollar basket. That's for darn sure. I would be working on getting out of that as soon as possible and using these high yield dividends, and specifically something like MSTY, to help facilitate that. Because over the long tail, give it a few more years, it's going to get worse. Like, dollars aren't going to go, like, stuff's not going to get cheaper in dollars. It's just not happening. So till next week, people, it's been another good bag talk. I'm looking forward to hearing from you guys in the comments. Hopefully we pull in some people over on Reddit, because I do post my receipts. So for those of you who don't have profile pictures on Reddit and don't post your receipts, like, tap in with me. Like, we argue, but, like, I don't know any of your YouTube channels. Also, for the nondescript people that are going to be commenting down on the YouTube, like, for those of you who comment that are like my regulars, this doesn't apply to you. But, like, for those of you who, like, want to come at it, like, let's have the conversation. I do debates also. Like, I'd love to have panel conversation about this, because, like, we can do math, we can ask AI. Because when you're arguing finance, you are literally having a math conversation, which means that the only things that there are to talk about are efficiency and efficacy. Nobody cares how you feel. 2 + 2 doesn't care how you feel. 5% versus 75% doesn't care how you feel. If you want to buy Coke and get a 2% dividend and never be able to retire and think that that's income investing, awesome. You obviously don't like income as much as you say you do. You like growth, which is fine. You can get mediocre of both, because Coke doesn't grow that well, but it pays horribly. Also grows pretty horribly. So, like, I mean, you get the worst of both worlds. Like, that's fine. But if you're doing math, like, you're going to have to do some real funny math to make a case for these things. Like, I don't really have an emotional attachment. I'm like, this is just what works. Like, if you guys got something that works better, let me know, because I'm interested. But outside of that, like, I love the conversation, love the comments. Don't forget to hit that like on your way out. Don't forget to hit the subscribe and formally join the Wolfpack, because we ain't trying to get rich over here by ourselves. For those of you in the Wolfpack, all I ask is that you share the video. Also hit the like, but, like, share the video, because, like, you're already subscribed and hopefully you've already hit that bell. So just share the video, man. Like, just throw it up there. See, you never know. You might have some people around you that are interested in talking about money. You could have a friend that's not dropping in my DMs on Instagram that you could talk to in person and go grab coffee with. Till next week, people, it's your boy Reckless Ray Dinero, and we are out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.